What's good, everybody? It's Jordan. Come back at another video. So with this video, I'm going to do the recap for Tuesday, July 14, 2026. Now, I'm going to let you guys know in advance I did not trade on this day, and the reason for it is because if we jump to Forex Factory today, July 14, Tuesday, right? It was core CPI, and I don't trade the days of core CPI. So the thing about me as a trader is there's days where I'm behind the chart trading, and there's days where I'm not behind the chart trading. And core CPI is a day where I'm not going to be behind the chart trading because this is usually an aggressive news event that usually has a massive push up. Usually CPI events, it's an aggressive move, either bullish or bearish. And typically with this move up, it takes out a lot of trades and a lot of liquidity, and then it usually leaves just a lot of consolidation afterwards. Not I just want to sit in consolidation, right? So I don't trade the day of CPI or the day after CPI. Now also the day after CPI is core PPI. In this event, usually at 8:30, there's a massive wick that wicks up and down, right? So it takes out buyers and sellers, wicking everyone. Sorry, let me mute my phone, right? This PPI, core PPI usually wicks both sides top and down, right? And it takes out buyers and sellers. And I usually don't trade on this day. So uh, if there's something for me to talk about, I'll record a video for that. If not, I'll probably just do trade breakdowns for Thursday and Friday because those are going to be the days where I'm actively behind the charts, right? Great. So first thing we do, like we know, every single day, we determine the higher time frame bias. So which direction, and we do this on a 1 hour time frame, only the 1 hour time frame, which direction is price most likely to go, up or down? So now, if you look at the previous day we were bearish, right? You see price went down, right here, right? Price was bearish and price went down lower, right? So it might be easy for someone to think or say that price should continue going bearish because price went down the day before, right? However, I went in with a bullish bias. Why? Right? So if we look at price right here, right, for the S&P, you see that there is a low that was formed. Now, prior to this low, where was the most recent swing high prior to that low, right? It was this high right here, this candle, this bullish candle here. So this was the last lower high before the lower low. Now, does price break structure? Yes, right? Because this candle right here clearly trades above this high. So to me, that is a sign of bullishness. Now, also, right, as you can see, clear as day, I don't factor this in whatsoever, but you're also seeing a massive bullish candle and a massive bullish fair value gap, and you're seeing all these candles right here, wick, 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 right? So you're just seeing non-stop wicks. Is showing that price is struggling to go down, that price is respecting this fair value gap, and it's showing signs of it wanting to go higher. So once again, I don't really factor in like fair value gaps. I just pretty much go off of purely structure. But if you wanted to have another confirmation to show bullishness, right, to determine high time frame bias, you have it clear as day right there that it's showing signs of bullishness, right? The same idea with the NAS, right? You see, originally NAS went down from yesterday. What's the lowest low that got formed, right? You see price went down, it went up, and then it went down, right? Showing signs of bearishness. Now, for this low, this was the lowest low. What is the most recent swing high prior to this low? Obviously, this high right here. This high clearly gets traded through with this candle. To me, that is a break of structure. Of course, you see a massive fair value gap that was left. And then also you see another fair value gap that was left here where price was just wicking, wicking, wicking through, right? Price clearly was respecting and was not trying to go through it, right? Once again, don't factor in fair value gaps, me personally. But that is also another clue of where price is most likely headed. So it's showing price is giving you all the signs of being bullish. So now, with that understanding, we can now dive into the 15-minute time frame, and here we are going to mark up our liquidity pools. Remember, we are bullish, so as a result we are looking for, all right, cool. So as a result we are looking for the most recent swing low prior to 8:30. So like I mentioned to you with CPI, right, you're seeing a massive candle. So this was a CPI candle, this large candle, CPI candle. Look at it, it's like half of it is body and half of it is wick. Like, this is why I steer clear from it. But you can see this aggressive pusher. Why did CPI go this high? To clear this high. Okay, irrespective, it didn't clear this level, but clearly it went above this high and clear this high, right? So this is what I mean. Price has a tendency to do these things, right? The same idea with the NAS, right? This large CPI candle up here clearly cleared this high, and it's also tapping into that gap as well, right? So you're seeing why I steer clear from this, right? So anyways, now I'm going to show you guys why I'm doing the breakdown for this, right? So to the left of 830, right? This candle here is the 830. We look left. Where's the most recent swing low? Clear as day, this low right here. So I'll mark this with red, right? Because we're bullish, so we want to see sell side liquidity get activated before pushing higher. Same idea here, right? To the left of 830, what is the most recent swing low, right? We also have it right here at this level. Now, of course, you're seeing what appears to be pretty much equal lows, or for retail traders, they like to look at this as support, right? But this is what meets my checklist and my confirmation. So this is the low that I'm going to use, right? Now from here, we can look at potential targets. Now, if we go into 1 minute time frame, right? Obviously, you have this large candle is the 1 minute time frame. This is the large 1 minute candle, right? Obviously, a massive move. However, we're looking at upside targets. So clear as day, if we're looking for upside targets, right, this would be the most logical upside target to have, right? And the same idea with the NAS, the logical upside target, because we are bullish. So we want to see price go higher. So if price is going higher, right? Logically, price would have to eventually clear this level right here if price is in fact bullish, right? So these are the most obvious levels. And then we can look to the left, and if there's other targets, you can also mark those other targets. But you see this aggressive move up cleared a lot of the previous targets. So this is the main TP that I'm looking for if I were to be trading on this day. Once again, I don't trade on CPI, but if I were to be trading on this day, this would most likely be my final target. And then, right, as we let price play out, price will most likely leave additional targets for us to hit, right? Like, for example, you have a gap right here. This is a potential target for price to want to go to, right? At least right now, you're seeing another potential miniature high, right? I don't really like to mark many of these targets out. Um, like I kind of also like to see how it plays out closer to like 9:30. But if you're planning your trade out, right, nothing wrong with having this set up here, right? You could see another gap like right here, right? You can start putting out targets so you can start mentally mapping out like if you were to take partials, right? So you guys are getting the idea. So now we can start fast forwarding a little bit to see what starts happening. All right, so now we fast forward a little bit. Price is still in the range from this liquidity pool to this high, right, for both pairs. And then prices, for the most part, it's kind of consolidating a little bit. It's kind of like staying around the middle. And if you end up seeing any other additional targets, like you can start putting those out, right? Like another example, right here, you're starting to see another potential gap, which this could be another take profit. Why? Because remember, we're bullish, so we want to see price go under this level, and then we're going to take price higher up here, right? Same idea here. We want to see price go all the way down, and then we want to take price up here. So we want these to be left open. We want to ideally have these targets be available. So now we are at 9:26 in the day, 9:27, 9:28, 9:29. One more. So this is the entire move prior to 9:30. Of course, this gap gets closed. That's okay, no big deal, right? But you're still seeing some targets that are still available. So now let's see what happens at the 9:30 open. So boom, you're seeing an aggressive candle, bearish, 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 right? These are all good signs because we want price to go lower to our point of interest, which is our sell side liquidity that we want price to purge. Now, potentially, you're seeing a potential new target be formed, right? Potential new target. You're seeing all this happen. Cool. So now we're just going to continue watching price. Watching price, right? Price is still kind of moving. Okay, this target got taken out here. And so at this point, of course, if I were to be trading on this day, it's a little bit less desirable in the S&P because, this target was cleared. And once again, you want the upside targets to be as available as possible after 9:30 because 9:30 is the most important time frame. As you can see with with the NAS, right? No previous highs were taken after 9:30, right? This high is still left intact. So price is still just like ranging. And so long story short, basically this level never gets taken with the S&P. S&P never touches it. So I'm just going to full screen it on the NAS, right? So here we go, the NAS. So all your attention is here now. Because if the S&P, remember, that's one of our confirmation for it to hit our point of interest, our sell side liquidity. If price doesn't hit the liquidity, we do not do anything. We do not touch price. So this has to happen before we even consider taking a trade, right? So now as you see with S&P, I mean, sorry, with the NAS, right, price is going lower. What do you also see now? Another potential target, another gap that gets formed, right? So these are all different targets that are being made. You're seeing prices making its way down. Okay, boom, right? So here at 10:16 a.m., price does what? Right? It obviously goes under this level here. So this fits the confirmation of a liquidity grab because price went under the level and snagged the liquidity. So at this point, we have a liquidity grab. Now what we want to see is a bullish fair value gap because if price is able to deliver us a bullish fair value gap, that's a signal that price, ideally wants to go bullish, right? And that's what we're looking for. That's what we take as an entry. So now you see here, clear as day, a bullish fair value gap right there that price left, right? So that would be potentially where you can have a limit order set. Now also, you also want to utilize your other time frames as well because you don't want to only just look at entries on the 1 minute time frame, right? If you look on the 2 minute time frame, you have an entry clear as day right here. Now remember, this is an entry down here and then there's the entry down here. Out of these two fair value gaps, of course, this fair value gap right here is more likely to get traded into because this fair value gap is higher than this fair value gap down here. There's no guarantee that price is going to go at that lower level. So a more higher probability entry would be entering at this fair value gap, even if it makes the risk reward a little worse. If the risk reward is still, good, if it's still to your liking, then you can still take the trade, right? So clearly this liquidity was taken. Price begins pushing up and leaves a, you're starting to see bullish momentum. You see a bullish fair value gap. We're bullish on the higher time frame, right? You're seeing upside targets, right? This fair value gap right here. You're seeing a gap here. You're seeing, pretty much like equal highs here, another high here, right? Gaps over here, right? And this, so this would be like this high right here would pretty much be like my final target. So while this is happening, right? I typically like to plan on my trade. So from the entry to this fair value gap to the final target, it's a 1 to 2.5 risk to reward. To me, that's good. That's perfectly okay, right? Now this would be probably like this gap could be one of your targets, right? 0.7 not really the best. If I take a partial, I want it to be at least a 1-to-1, right? So this right here, at least right now, if I were to take a trade, right? If it were to hit my entry, this would be what I would be looking for. Now let me kind of clean this up a little bit better for you guys to make it easier for you to see, right? So this would be your entry right here, right? Potentially. And right here, this could be potentially your first take profit, which is a 1.37 risk reward. So at this point, at the very least, you could take off a 20% partial or even 50%, right? And then as you get to this next level, this could be another partial. So here you could take off, have at the very least, in my opinion, at the very least 50% to maybe 80% of your position close because this is already most of the move and we are getting closer to being to this high. Then when you get to this, fair value gap, could take off another 10% to have 90 to 95% of your position close up to this level, right? You can decide how you want to take partials however you want, right? But I'm just showing you the logic in this, right? So this is already what I'm looking at. If I were to be trading on this day, I'm not trading on this day, right? I'm gonna keep repeating myself. So then, right, as you can see, price now taps us in. So what we're doing now, at least based on new strategy, is that I would take partials, right? Like I would take partials on the way up. I would take partials here and here, and I would consider moving my stop loss to break even pretty much at the end of the session, like at 11 o'clock. Because, like if you've noticed in my previous trading videos, many times because fair value gaps act as magnets, many times price returns and taps into it over and over and over. So if you move your stop loss to break even, you can be taken out prematurely before the actual move. So you would enter on a buy right there, and then as price plays out, right, you're experiencing a little bit of drawdown, right? Price is just hovering around the gap, and then what happens with this candle right here? It clears this high and this high right here. So at the very least, in my opinion, right, for price to take out this level, this would be a 1 to 1.62. At the very least, you should close 50% of your position, but maybe 50 to 75 to 80, whatever, right? But you get the idea. You should take at least a strong partial at this point. And then because you've taken a strong partial, let's say you close 50% of your position, right? You only now have 50% risk open. However, because you've taken a partial, if price were to reverse against you, you would pretty much, I think you would still be a little bit in profit. Yeah, you would still walk away in some profit. So it still wouldn't even be a losing day. And you're okay with having this trade open without moving your stop loss to break even because you're trading with reduced risk and you've already made profit. And you want to keep it open because you understand that price might want to return to the fair value gap. So as we continue, right, we just watch price, we let it play out. What eventually happens? Boom, you can see right here, clear as day, price taps into the fair value gap again. So if you rolled your stop loss to break even, because this is right now, you see this happened at 1050. So if you rolled your stop loss to break even prior to 1050, you would have been taken out at break even. And then as you watch the rest of price, right, price does not return. We can get rid of this, right? Price does not return back into the fair value gap. You just watch price, and then price will continue hovering. I mean, put it on the 2 minutes, right? So it can move a lot faster, right? But you can see price continues consolidating, and then if I just leave it and return to real time, you see that price eventually does in fact clear this high and it hits your final target. So right, this trade will be to 1 to 2.5 risk reward, something like that, give or take, right? You guys get the idea. It would be a pretty decent move, right? A pretty good day. And you're seeing that your targets are all getting hit and price ultimately hits the final target. So I say all this to highlight that this is the strategy at play. Even on days where I'm not trading, this is CPI, I'm not trading on this day, right? I'm showing you that the strategy is still playing itself out to the T, right? Price, we were bullish on the higher time frame, on the 1 hour time frame. We were bullish because it was clear as day that price was moving bullishly for both the S&P and the NAS. So we approached the day with a bullish bias. So because we're bullish, we're expecting price to go lower first, to dip into previous old lows, right? Push lower to activate liquidity, which it did right here, right? It cleared this low, even though it was a slight push. It still technically cleared this low. And then after it cleared the low, what happened? It pushed up and it made the gap right here, which is the entry. And then after you enter, you pretty much ride the wave. And then after at 11, you take partials, right? You took a partial here, another strong partial here, and then you move your stop loss to break even, and then you ride the wave, and then clear as day, you see that price eventually took out the high of the day because we were bullish. So we're expecting price to continue traveling higher. This is the power with this strategy, because even on days when I'm not trading, I can still go into the charts and see that it played out to the T. This exact strategy that I've been teaching, all these videos for the last week that I've been using, it's happening over and over and over. And this is the truth. This is what is happening with the market. So as you can see, technically, this wick right here made the low of the session because this was the lowest part of the session. And then shortly after it made the new low of the session, you were able to take a trade right here. And you took a trade pretty much at the bottom of this. This is pretty much like the range that we're working with, right? You took a trade in the bottom half of this range and you were able to ride the wave to the top. And that's what you want to do, right? If you're trading, if you're bullish, you want to be buying low, right? Buying at the bottom and then selling at the top, because that is how you're able to make a profit, and vice versa. If you're bearish, right? If you're bearish, you want to be buying high and selling low. So I wanted to record this because this was a perfect day to show you guys that, one, this is a day that I don't trade CPI, but two, it's showing you that even on the days where I'm not trading, is showing that the strategy still delivers, that this is what happens in the marketplace because this is what repeats. This is the market. This is what it's doing, right? This is why you can't just go off of market structure thinking of, structure is going to be the answer all the time, because if we were bullish on structure, right, you see this push up, right? Most traders, they'll say, okay, I'm bullish, so let me just go long right here. Why? Because if we're bullish, price shouldn't go under this level. And since we're bullish, I can take price up here. And then guess what? If they would have done that, they would have gotten stopped out. If they would have put their stop loss right here at the low, right? So market structure is not alone is not the answer, because this push lower under here, most traders would think, oh, because price push under this level here, now price has to be bearish. So then if you at any point are trying to take a sell, right? If let's just say price went up here and you decided to sell up here and you put your stop loss above here, sure, you would have made a little bit of profit because this is a nice little move right here. But if you decided to hold thinking that price was going to go lower, you would have eventually gotten stopped out because it ultimately ends up clearing the high, right? So this is why it's so important to determine your bias, to figure out which direction price is most likely to head towards, and then you want to only trade in alignment with that direction, and you want to maintain your bias and stick with that bias for the duration of the session. Because if you do that, even on the trading days where you shouldn't be trading, a trade plays itself out, and it plays itself out to the T, right? And you're able to take the entry, the one trade. This was the only, pretty much the only opportunity for you, right? Take the one trade, the one entry, and then it would effectively hit all of your targets and you would walk away a winner, right? So this is the power of the strategy. This is why you need to learn this. This is why I show you guys this, so you can see the truth in the markets and you can be able, hopefully, to adopt the strategy and begin applying it and being able to see success and results in the market as well. So that wraps up the video. Enjoy the video. Do leave a like and subscribe as we're on the road to a million subscriber, guys. So once again, it's Joel and I'm out. I'll see you guys for the next video.